Have to add myself to the stream. Yeah, sorry about that. Yeah, I was not tired yet. It's 11:30 my time, and it's going to be probably bouncing around some content on YouTube, and wanted to just give the opportunity for anybody to ask questions while I'm just hanging out. And in the meantime, figured I would just go live, hang out with you guys of any way, shape, or form that I can. And curious to see what things have come up on uh, CNBC Money or anything like that. And yeah, did a lot of extensive work today, so I didn't really get the opportunity to really dive in and check out what really happened with the market other than Palantir, Rocket Lab, etc. So it'd be nice to be able to get that opportunity to take a quick look on what is actually going on for the markets this evening. Let's see. And actually, while we're here, actually, no, let's just hop in. I don't want to necessarily look at Mad Money. Let's see. Oh, Netflix, huh? Do they have a good earnings? Let's check this out.
That stock higher by about 4% after reporting third quarter results. And joining us now is Propagate Content Chairman and co-CEO Ben Silverman. He was formerly
What's up, BD Ben?
Entertainment and executive producer of The Office. And he's author of the new book called The Night Before Christmas.
Stop. That's funny.
Ben,
Netflix at $721.
Kind of beating a raise here, but it has been on quite a run. How much does Netflix's run recently reflect the separation in its business from the mainstream media players, which are not anywhere near all-time highs?
I mean, I think it's going to lead to more consolidation in the traditional media players and the kind of smaller streamer space, because the moat they are building is growing and quickly. And they're also out investing into original content, into sports content, into gaming, into technologies, all of which are going to continue, I think, to reward them as they expand their profits, but also as they expand their businesses. And one of the main things about Netflix is just what they've done internationally. You know, many streamers are looking to grow internationally, where Netflix has been, with massive operations in multiple markets, but they also have local content teams, not only local teams that are re-expressing the content from the United States and the productions that happen here, but also players who are commissioning content in local languages for local markets, to the point that Netflix may look like cable in 10 years to consumers overseas.
Okay, so mentioning a few of those competitors, we got a few names on the screen, but I'm thinking not just Disney, but Comcast, Warner Brothers Discovery, Paramount, etc. You mentioned investment. Netflix has the money from its streaming business to make those investments back into streaming. The others don't have that same capability. What kind of difference do you expect that piece in particular to make?
Well, I think you start to really see it, and you've seen it reflected in the Paramount sale and what, you know, Warner Brothers struggles. But, you know, Comcast has the ability to sell a lot of
Lisa, 30 and awake up, ET.
That can drive phone services, businesses that can drive investment in
what I saw Ray. What's going on, Ray? We got Adam, we got Space Ghost, we got Brent, Adam again, Miss Lisa, Jude Jr.
Advertising and scale side has a lead on Netflix by a huge margin.
Yeah, the rebuilding cable, man, it's like insane. Think about how many different things you pay for. I pay for,
as does Apple. Apple's playing a little bit more of what HBO was kind of 15, 20 years ago.
I pay for Prime. Prime's obviously for like Amazon, and I get like free shipping and stuff though. I pay for HBO. I pay for Netflix. At this point, I pay for YouTube TV because I'm watching football. After football season though, YouTube TV is going off.
MGM did, being acquired by some of these larger players in the future.
My guy.
Given the fact that you do create and produce shows for Netflix and others, just your sense of
Yeah, man, I know.
look
Some
for
people
content. And we've had analysts on this show ahead of Netflix earnings saying,
some people prefer Twitch, so I like to give them the opportunity. So, and the nice thing about Twitch is you get a free membership as well. So people that are interested.
and content spend, at least at Netflix, is very steady, even as we see free cash flow continue to ramp here. But we also know some of those more traditional media companies are really tightening belts and cutting costs. So how does all of that shake out?
Well, I worry about that slippery slope, right? You're competing with a competitor who's now, outgrowing and outspending. You can't cut to compete. You can cut to make a quarter, but you can't cut to compete in the long term. So it'll be interesting to see how that plays. I do see a more mixture of investment. So instead of every TV series on the scripted side being $9 million, you're able to populate shows that maybe cost $1 to $3 million. You're able to commit to documentaries, which have been unbelievably robust. We've been living in a golden age of television. We're also in this golden age of documentary and other genres that are much less expensive to invest in and can round out your portfolio of content. So I think they're going to have to be smarter about it, but they're not giving up, right? NBCU.
All right, so there's that one. I did want to also transition over to search and AI with respect to that. I know a lot of people think that and have thought that Google will go to zero with everything that's going on in AI these days. And one big company that I know a lot of people bring up is Perplexity. And they had their CEO on today. So let's see what he had to say on CNBC.
Much of the talk around generative AI is centered around OpenAI, but there is another fast-growing player in that space who wants a much bigger piece of that pie. Perplexity AI CEO Aravind Srinivas joins us now. His company ramping up its efforts now to take on Google and others in search and advertising. Aravind, welcome. It's good to see you and welcome you to our program.
Thank you so much for having me here, Scott. Great to be here.
So you have some new features that you're introducing today, which you think will give users better and more targeted search results, correct? And also deliver them faster. Can you tell me about that?
Yeah, 100%. So today we launched our internal knowledge search. So we want Perplexity to be the central knowledge base and research platform for everybody. And when people do their research at work, they're not only requiring research for the data that is already out there on the internet, on the web. A lot of research is about like due diligence documents or stuff that's particularly relevant to the company that you acquired in a proprietary way and storing within your internal knowledge base. And today there exists no one tool where you can do consolidated centralized research on both these data sources, the web and your internal company proprietary data together, and use both of these for answering your questions or like doing your diligence or like deciding which companies to invest in, all those sort of decisions that you do on a day-to-day basis. There doesn't exist one single tool to do all of it together. Mm-hmm. And so far, the technology stack for external search and internal search have been pretty fragmented. They're very different. They're completely different tools, and you have to like keep moving around data everywhere. It's very inconvenient to do all this. But with the advent of AI, like generative AI, large language models, multi-step reasoning, tool use, it's almost like every single source of data is just like another API call or a data API call or integration. And these models can decide like what to use when for depending on your query you ask. And then we're able to bring it all together in one platform through Perplexity. And that's our announcement today.
Do you know what I think is really interesting for our viewers and those who work in the financial services industry is that you're specifically targeting financial services as your largest vertical here. Tell me what benefit that's going to be to those who are either in the financial services industry who are watching now and who are going to use these tools, or for the viewers who are investing in the market and who are going to be better off by virtue of the tools that will be used by financial services professionals.
100%. So before today's launch, we also broadened the ability to query all the stocks on the market, get news relevant to any particular stock, or like search over related stocks and like look into the 13 EPs filed by big institutional funds. All that data is already being brought onto Perplexity for just generic financial searches. And now you have the ability to like take all your internal data and search over the web. So if you are deciding if you want to like invest in a particular company and you have all your diligence documents prepared by your analyst, and you want to take that and also query the web based on what people on the web were talking about the company, and come up with an aggregated summary and highlights and like what you need to do, and like depending on your portfolio of your fund, should you go and invest in this particular stock? Does it have the right risk reward ratio? You can ask these sort of questions, and these decisions are worth like several millions or even.
I don't know. I'm just not a believer that it's really going to be an impact when it comes to impacting Google, right? I think it's just, there's just so much still that I think people just continue to, what's the word I'm looking for? Underappreciate, or I'm missing the word. It's super simple too. I guess like overlook the ability for Google to continue to dominate in that space. And I just don't necessarily understand, but I've yet to use it. So Adam, if you have any insights, it's a nice tool. It's not Google. There you go. Heard it from the horse's mouth. I'd be curious. I should, underestimate. Thank you. Yeah. Discount. Yeah. Those are good words. Appreciate you guys. But yeah, that's something maybe I should do. I'm a firm believer in Google's opportunity and continued success with respect to AI and search and everything the like. But if the tool is downloadable, maybe it's something where I put my money where my mouth is. But minimum civil unrest the day after election. Interesting. I'm starting to see some other folks chit-chatting about what's going on in the markets. Some people saying they got free Netflix with T-Mobile. But what do I think about what's going on with respect to this upcoming launch with Rocket Lab? Let's take a quick look. So let me go on Twitter. And for those of you guys that are not aware, we were actually doing Rocket Lab Weekly, as we do on every Saturday. And I try to co-stream it with BD Vince, as I like to call him. And with that, I was just wondering, because we are now in the fourth quarter. We're pretty much, halfway done the fourth quarter, first month of the fourth quarter. And we have yet to see any announcements on any launches. And so I was starting to get a little bit worrisome about, how many launches are we actually going to get with Rocket Lab? Obviously, last year we had 11 or so launches. And so the hope is that we would be able to get closer to 15 to 18, just based off of some of the key launches being delayed out into 2025. And then also some earlier launches kind of being pushed into the fourth quarter. So with that, you inevitably have to, you only have so many launch windows. So you either have to push people to the back of the line or just budge them a little bit. And so the thing that was curious to me is, they're talking about how they're going to have potentially 4 to 7 launches in the fourth quarter, and there weren't any planned as of yet. But yet here we go. Apparently within 2 months of them signing a deal, they basically got everything ready to add an extra mission into the launch lineup. So they were able to get it done for a confidential commercial client from contract to space in less than 2 months. So that's pretty quick turnaround, right? I mean, I think that that's something that people should note when it comes to the mission of the organization, which I'm curious to see on launch day if we actually find out who the commercial customer is. But for now, the actual mission name is Changes in Latitudes, Changes in Attitudes. You don't see a customer or anything on here, so it is a private customer. So I'm very curious to see who ends up showing up as the actual customer. Will they let us know? I don't know. And then obviously Varda as well, receiving authorization from the Australian Space Agency to land one of their satellites, which allows them to do near zero G experiments in space. So very cool to be able to see out there, and then some additional stuff from Planet. But yeah, so I'm curious to see. This is going to be very early on Saturday, so this will be about 5:30 a.m. my time, 6:30 Eastern time, AM. So there's that. I would love it to be a haste, but they did say it's an electron. So um, I don't know, or at least I thought it was an electron. So good question. Maybe it's not. Maybe it's let me see. So the next launch, so share this tab. Let's see if this gives any more insights. It says it's an electron. I don't know. I don't know if this was a haste mission, if it would say haste. But as far as I'm aware, at the moment, so I mean, keep in mind this is up for change, because I did ask Sir Peter Beck when I chatted with him after 2Q earnings. I said, it's the anticipation to launch haste in multiple places, not just New Zealand and Wallops, but actual other places where there could be need for testing. And keep in mind, when you think about what's the word I'm looking for? When you think about the use of haste in other places to be able to use for remote communications or something of the like, where I'm thinking you need a haste rocket to potentially get you thousands of miles away. So think like if you need instant communications in Israel, you'll be able to launch the haste rocket from, I don't know, some base within the Middle East or some base within Europe, and have the ability to access and provide communications in a pretty instantaneous basis, or last mile sort of defense, right? I'm not saying that the haste rocket is providing any sort of defense or anything of the like, but the vehicle itself will allow you to get into the vicinity of an area in very quick mission fashion, and then you have the ability to use the second stage, whether it's a secondary propulsion item, whether it's a communications device, whether it's I'm not exactly too sure what other devices they're going to potentially use, but I'm curious to see if they would still call that an electron rocket. So but yes, that is something that is a competitive advantage, specifically when you're talking about SpaceX at the moment and using the transporter. I mean, the backlog associated with that is several years. So, yeah, I'm anticipating it's not a haste, but I am very excited about the haste potential. I agree. It could be about 100 million in 2030 revenue, but I'm also curious to think about what really is it only going to be 100, because you think about it, I'm not exactly sure how much a haste mission would be per launch, but excuse me, that would mean only like 10 missions per year, and we're supposed to get 4 in the next year alone. So my hope is that you grow to maybe 20, 30 launches, which would be closer to 200 to 300 million a year. I'm not 100% certain, right? So we'll see. I'm very curious. I think it's just another avenue. You have 4 customers at the moment with 1 launch only to date, and that was 15 months ago. So I'm very curious to see where that potentially goes. The mission name kind of seems to indicate a big change in latitude, like quick change in latitude to change some adversaries' attitude. Oh, good thought. From what we've seen so far, they're predicting that the haste rockets will be more expensive, yes, than the electrons. Now, I'm not 100% certain why, if that's, and from what I understood, and granted, this is my interpretation, and it's up for interpretation and clarification as well. And maybe this is something that I can dive deeper on if I get the opportunity to talk to Peter or Adam in the future. From what they made me see, so it's also commercial satellite. So this also makes me realize that it's probably going to go into space. Another thing that I'm trying to think about is they talked about pretty much that it's like regulatory and also like additional criteria that would make it more expensive, whether that's like the quietness of the launch, like in terms of no marketing or what have you, and that requires them to be 10 million, or I don't know. I'm not 100% certain, but it seemed like the average cost per launch is in the $8 million range. And at the moment, they were quoting haste missions for 10 to 10.5 million from what I've seen. So But Rocket Lab postponed the launch for several days. I'm not exactly sure which one you're potentially talking about. Generally speaking, from what I've seen and heard, whether or not this is true, every time there's a delay for a Rocket Lab launch, it's either due to weather or due to the fact that the customer is not ready. So it could be the case where Rocket Lab wasn't prepared, but from my understanding, it looks like it's pretty much there in the hand to be able to go into launch. But there was a segment that Kramer talked a little bit about Palantir on CNBC. So curious to hear what he has to say about that.
It's time for Jim and Stop Trading.
Well, the great retail stock of this generation is the new people's Palantir. PLTR Mizuho comes out today. They have a sell on it, underperformed. And but they raised their price target. And this is from my top 10 list I do every morning, free to anyone who signs up for it. It's numbers 5. And I love this. In their little mention of Palantir, they say, we remain concerned by the lack of visibility into its business, and we find the current valuation indefensible. We raise our price target to 30 from 24. So you have this problem where you have someone who doesn't like a stock and it just won't stop. Retail loves Palantir. Obviously, they have software. They have Alex Karp, who's one of those CEOs that we dream of, right? He kind of just tells it like it is, curse words and all.
Yeah, I saw Oppie up the target on ServiceNow as well.
Yes, absolutely. We have a lot of the software companies that are doing well. I continue to think that Agentforce for Salesforce, Mark Benioff, is going to be the biggest product they've ever had. Look for a launch later this year. There's just things happening in AI that, again, Taiwan Semi has said is real, and they are. And people who want to chide AI should start realizing that it's not just ChatGPT and it's not just hallucination. I still use it. Yesterday, I wanted the lyrics of a song. I went to Meta. It says, I'm not allowed to give you that, sir.
Interesting. Oh, that's really helpful, though. I mean, the larger question is, when is it really going to start playing in the enterprise in a significant way and/or justifying
well, that's very easy.
The tens, if not hundreds of billions of dollars?
That's very easy. When you're no longer sitting next to me and I just talked to Agentforce, that's when it's made it. I mean, not that I want Agentforce. I'd rather prefer you. But I'm saying that if you're interchangeable, I guess we could all save a lot of money and the stock would go higher.
There it is. There's Benioff on Agent.
That's a very important note because, and by the way, Matthew McConaughey is going to be involved with that. He's a great actor, but he's also a thoughtful person doing thought leadership on AI. And Matthew McConaughey's really cool.
I think Kramer, would be one of those people that if the stock wasn't doing well, he would be, and I think he has been critical of Karp in the past. And yeah, you even have 30 and Wake Up saying that he was, giving Kramer crap because he hasn't been on the show as of yet. So I'm kind of curious. I mean, I think Palantir is kind of, I don't want to say an anti-Wall Street. I don't think that they're trying to intentionally hurt Wall Street in any sort of which way or the other. But at the same time, to me, it just makes me feel like it's one of those ones where if the stock's doing well, they're going to praise the CEO. If he's doing poorly or the company's doing poorly, they're going to be like, this guy's unconventional, get him out of there. And I can't tell you how many other people that we've had on Palantir Weekly or just in general where they're just like, you know what, like he needs to go. He's not the legit sort of CEO. He's not polished. He's not professional. But those are the kind of people that found companies, most of the time when people are super polished, it's because they've been afforded the luxury to be super polished. They've been able to be coached. They've been able to do X, Y, and Z. And to be honest, sometimes that's okay. And sometimes to me, the thing that bothers me about people that are super polished is they're almost faking it till they make it. And I see that sometimes in the corporate world where I'm just like, these people more so care about what's the word I'm looking for? The visuals and the right thing to say rather than doing the right thing. So they're looking almost to like, I don't want to, anyway, so it just gets super political to me. Just get the effing job done sometimes, So yeah, the optics, thank you. That's a perfect word for it. Yeah, there's so much concern about the optics of certain things where they're willing to bend the truth some way, which or the other. So, but going back to this person's statement, I think that they're referring to the day that they did a refurbishment probably like 2 or so weeks ago. It might have been the last launch that we had in September, where they had to do a refurbishment of Launchpad 1A, and they had a trip on one of the ground sensors, and so it wasn't able to actually launch. That rocket did eventually launch, and if you're worried about a rocket launch taking an extra 2 or so days to be able to launch, then not the company for you. But since then, they've now launched their 53rd vehicle, and this upcoming week will be their 54th vehicle. So the only other person I know that has launched more than 54 vehicles is ULA. Probably has overall. I don't know if they've launched more than 54 Delta 4s or anything like that. It's a good question, but I don't think they have. But other than SpaceX, who's launched more than 50 odd vehicles in one particular sitting recently? It's Rocket Lab. Business as usual, right? Yeah, people are like worried. It's like, oh my God, we're not talking about Astra here, people. Like, we're not talking, oh, we got to come back and visit in a couple weeks. It literally took a couple days, and the rocket went off without a hitch afterwards. So you can hate about it as much as you want, but at the end of the day, it's doing rather well. So anyway, 50 odd of you guys in here, been here 26 minutes or so. Curious if you guys have any thoughts about anything that you want me to chit chat about. I can keep looking for particular clips that I was curious about. I'm actually curious how Amex did in the after hours. Netflix after hours is up to 721, up about, what was it? It was a couple percentage points. Looks like Amex, man, this hurts my heart, because Amex is one of those companies that back in the day I actually used to own, and I owned it in like the $70 to $80 range, and I want to say it was back in this time period, the 2015 2014 time period, around here. And I think it started to drop a little bit in 2016, or maybe I bought it on its comeback up in 2017. I don't remember. I want to say it was probably in this 2013 2014 timeframe. It wasn't enough where I'd be sitting here whimpering because I sold early, but it just goes to show you sometimes you got to buy and hold really good stocks, because they can move at times where you don't necessarily think they can. You might sit there and say, Amex is a dying business. People were getting rid of it and talking down upon it because they lost their Costco contract and everything the like. But company's doing rather well. Thoughts on Next? I have a lot more than most people would probably have in most stocks. So I've written articles about it. I think it's a decent one. So we talk about quite a bit on Cash Flow Chronicles. I think it's going to be very binary. I'm confident that because of all the political parties that are associated with it, you have Shell, you have Total Energies, you have Abu Dhabi attached to it in multiple different ways, meaning ADNOC, as well as some of the other investment arms of Abu Dhabi, the Abu Dhabi nations, Emirate nations. And then you also have Saudi Aramco now involved. So to me, I just think that there's so many political parties that it's going to go through. However, it's not necessarily the case. Construction's ongoing. Believe it or not, we're going to be within 2 years of the first train starting to actually produce, run gas through it, because it's not producing any gas, but it will liquefy gas. And so I think it's a decent opportunity. What I will say is that it's, won't be for the faint of heart. You could hear or wait in time, and depending on how long you wait, is it another year or however long, until we actually hear news? That's a good question. You could also hear that in the meantime that they stop construction, and that will not be good for what happens for NEXT, because right now they're continuing construction. So I'm very curious to see when they report, actually. Let me go back and see when they report, because I'm also curious about that. So they supposedly report November 11th. And so I'm hoping for an updated presentation from them about the progress on train 1 and how far they are through construction. Because keep in mind, these projects take time. So they generally, when they build trains in tandem like this, they try to have train 1, then train 2, then train 3 start up within 6 months to a year of each other. So if train 1 gets off in mid 27, by year end 27, or within 9 months of the first train going off, they try to have second, and then 6 to 12 months after that second train, they try to have the third. So I know that they've gotten all the things procured for the third train, but they have yet to start anything for the third train in terms of the actual construction. So I'm curious to see, are we 30% done train 1? Are we 40%? I would be very surprised we're 50% since Q2. I think if I remember, they were about 24% or so done for construction at the end of Q2. So there is that. But MRO, is that Marathon? Yeah, Marathon Oil. So is one I regret selling, bought it like $350 during COVID, and that was during one of the first real stocks that you had bought. So you did well with that one. Let me share my screen here really quick. And apologies for the mess in the room. So I did get a new desk, and that's why you see boxes in the background. So I need to get everything all cleaned up, and hopefully I can do that this weekend. Get some things. So yeah, you bought at $3.50. Congrats to you. But it's one of those things, man. Like, a lot of people are like, oh, I'm sad I sold it. But to me, this is a prime time to be selling stocks, because you've been able to realize a lot of full value. When you buy some of these cyclical things, you have to realize that some of these companies are cyclical, and oil especially. Like, there could be a Middle East conflict that, shoots oil up to 80 or $90, but it doesn't, in the medium to long term, it doesn't impact the next 2 to 3 years. Like, you might have a supply chain issue in the short term as they try to reroute things and get things continued from a supply chain perspective. But the next 6 months to a year, you still have a demand problem. So, and not only that, but if we enter a recession, we're going to even have more of a demand problem. So, to me, I just think that oil right now, you got to wait for another dip. Are we going to have another negative oil price? No, I don't think we're going to have that unless some sort of pandemic happens again. That was unprecedented, and obviously was a once in a potential lifetime sort of scenario where you see negative oil prices. But I wouldn't be surprised if we see oil go to the 50s in the next 6-12 months. So what's my average for NEXT? It's like 5 something. It's like kind of like break even at this point. Nothing, not like it's I was buying in the 8s as well. So it's not like when it went to 8, I was stopped or anything like that. Took profits on last NEX dip, but I'm thinking about buying back in a bit. Hey man, it doesn't necessarily need to happen, It's all up to the beholder. It could be very risky. I can buy ADNOC, but only the service stations. It is like a REIT. The oil and gas portion is not publicly traded. Just to buy shares in the service stations, I would like to have an open account in Abu Dhabi. And they have a strong monopoly here. Yeah, ADNOC, for those of you guys don't know, ADNOC stands for Abu Dhabi National Oil Company. And I won't speak too much about that other than that. But they do produce a lot of oil in Abu Dhabi. Matt, you've mentioned you own index funds. Do you DCA or have another approach like DCA and add extra at certain percentage dips? I know it's not as flashy as individual stocks, but super important. Yes, and I think I was actually having this conversation yesterday with a buddy. He's more of an intermittent investor. He will be really into it for a month or two, and then he won't look for 6 months. And then he'll be really into it for a month or two, and then he won't look at it for 6 months. And so those types of people, especially, they think that they're doing themselves a favor. In fact, they're not. Most of the time they are not. So I told him straight up, I was like, just invest monthly in the SPY. And the beautiful thing about that is if you grow a sizable enough position in the S&P 500, you can get a line of credit against it. So say you want to redo the house, or say you want to buy real estate and you don't have the money, you can get a line of credit and purchase the house and get way more favorable terms, because when you get a line of credit against your investment portfolio, you're playing simple interest. So you might say, oh, it's 6%, like 6% amortized versus 6% line of credit. Like, obviously, I should just get the mortgage, right? And it's like, well, a mortgage, generally speaking, is going to be amortized. And so, you're going to be paying a lot of that interest up front and way less in the back end, versus simple interest. You're just paying. It's like if you wanted to and only pay the interest on it, or not even pay the interest at all, just let it accumulate. You could do that, and they might give you a term of 5-10 years or something against that line of credit. And you can just say, I'm just not going to pay any of it back. I'm just going to accumulate that 6%, and I'm just going to buy this house, do some renovations with it or something like that. And then, so anyway, just some food for thought there. And I've actually thought about doing that in the future, where if my SPY position gets large enough, I'm going to siphon it off probably to a different account. Because when you do lines of credit on stocks, you can't buy and sell them. So like, it wouldn't make sense for me to do it on Palantir, because I could be, what if it goes to $1 billion and I want to sell it, right? Versus my SPY, I don't know if I'll ever sell SPY unless I want to use it. Let's just say in the instance of, say, Palantir or something goes super cheap. And I'm like, well, I'll never see this price again. And I think it's a really cheap price. And I might use some of my SPY almost as a piggy bank, which is what I've thought about using it for. But anyway, I would say I mostly DCA into it. Where I haven't is times like right now when I'm trying to build out positions like Rocket Lab or something of the like. And really what I'll end up doing is I'll like companies and then move out of them as I feel like they've realized their full potential. So a good example of this was PepsiCo. So I bought a lot of PepsiCo in like 2017 or 2018, and I ended up growing a decent amount of shares to the point where it was like a 25-ish, $30,000 position. Actually, I think it was closer to 40 towards the end. And I think my cost basis on it was like $98. So it like was around 100% return. And I was sitting there with 40 grand. I mean, that's a pretty decent chunk of change. I mean, you're talking about a couple percentage points on the portfolio. I was like, what do I actually think about this? Like, do I think that Pepsi is going to double from here, triple from here? And the answer is kind of like, I think maybe with inflation over time, they're able to buy back some stock. It could double over time. But I mean, you're talking 15, 20 years down the road, right? I mean, you're talking about normal sort of returns, maybe slightly above, maybe slightly below the S&P. And so then it makes you think, you're like, well, I think some of that money I sold and put into SPY, if not all of it. And then some of that money I put into potentially buying more Rocket Lab or something of the like, and concentrating more into some of those positions. So when the market gets really high up, I like to take this opportunity to trim positions that I don't think will make it through the next cycle. And so, for example, Stag Industrial, that's a company I've been investing in since 2015. It probably lasted a cycle too long. In fact, I probably should have sold it in 2020, 2021. I never did. It lasted another cycle. And I said, you know what? I'm going to sell it. And I think I put some of that money in NVIDIA, and I think I put the rest in SPY or something like that. So it's whenever I sell a position, I try to think like, what am I going to do with this money? And the majority of the time I put about half of it in SPY. So there's that. And then I'm also actively contributing on a monthly basis. And most of the time that money just goes into the SPY. I will say a lot of times recently in 2024, since SPY has been rather high, I've been looking at things that I think are undervalued, which Rocket Lab was earlier this year. So I was taking a lot of money to that. And same thing with TQQQ. Like TQQQ, I sold and was sitting in cash right now. So, I mean, I have sold some cash secured puts on Rocket Lab. And if that goes down, I'm happy to let those get executed and buy more. But for now, I'm like, do I actually think that there's going to be another leg up in SPY? And for now, I'm okay to sitting in cash and running puts on TQQQ. So I think that's most of it, but I think you just need to have an answer for yourself, right? Like I'm comfortable and have conviction in Rocket Lab and where I think it's going the next 5 to 10 years. The problem that I see with a lot of people is they'll buy a bunch of different things, not keep a track on any of them, and then wonder why they lose money. And it's like, well, there's a big scandal with this company, right? You didn't do anything about it. And they're like, yeah, no, and that's part of the problem with single company risk is, investing in an NEXT. And I think a lot of people don't evaluate the potential risks associated with these things. Like I invested in NEXT knowing it could go to zero. And I think a lot of people didn't think about that. They're just like, oh, Matt and Chris said they like it, and I'm not going to do any due diligence or put any sort of thought behind it. But what I've realized over the past several years is even though some people are pessimists when it comes to risks, there's always going to be uncertainties or risks that you can't quantify that come out of nowhere, whether that's a black swan event like the pandemic, or whether that's just things because you don't know what you don't know. And especially if you're not in the industry, there might be a risk that you didn't even think about because you're just ignorant and you don't know. Like it's not ignorant in a bad way, you just don't know. So those risks can come out to bite you in the butt. And that gets mitigated when you invest in something like the S&P 500 when, it automatically will filter out companies that are magically unprofitable. Not magically, but just unprofitable because that's just how it works. So is that how the wealthy avoid paying taxes on capital gains? Yes and no. I mean, for example, if you were to take out, let's just say you do get a 6% line of credit on it, and you pulled out $100,000, you're going to get $6,000 of interest that year on that. And with that, you're basically going to offset your income. So let's just say you made $70,000. Well, your taxable income is actually only going to be 64. I was actually trying to explain this to somebody about real estate also. They were like giving me crap. They're like, yeah, but can't you only write off the profit that you make on the real estate itself? It's like, no, my guy. I was like, that's part of the benefit of real estate. So for example, this house that I live in, you might get $20,000 to $24,000 worth of mortgage interest. So if I were to rent this house out to somebody, I'd be able to use that mortgage interest against my personal income and write off taxes on that. And also I'd be able to depreciate the home. So I don't necessarily know what the actual improvements on the land are, but let's just say you're going to use the 80-20 rule, the 80% of the value of the house is the improvements and 20% is the value of the land. Let's just call it 350 for the house, for example. I can take that and multiply that by 80%. I get $280,000. Well, you're able to appreciate houses in a normal way, unless you do a cost segregation study or something like that, over 27 and a half years. Well, that's $10,000 a year in depreciation. Well, if you're in the 30% tax bracket, that's going to save you $3,000 a year in taxes. So people might be like sitting there. So you think about it, the mortgage interest you get, you can write off $20,000 to $24,000. If let's just say you're paying $2,000 a month in interest on those mortgages, you're able to write off another $10,000 for depreciation. So if you think about it, let's just call it $30,000 worth of potential write-offs right there, and you're in the 30% tax bracket, you'd save $9,000. So you might be sitting there like, I'm breaking even on this fucking house and blah 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 blah. And at the end of the day, you're kind of benefiting in taxes. And so you start to think, like, if you make $100,000 a year and you buy 3 or 4 $350,000 houses, you're going to end up not paying any taxes, because if you have all these houses that are generating $25,000 to $30,000 in write-offs and you have 4 of them, well, next thing you know, you're completely discounting your entire salary. And so when people ask, like, how do people like this not pay any taxes? Like the Donald Trumps of the world and stuff like that, they just own a lot of real estate. They own a lot of businesses. They get a lot of write-offs because of that. They're investing and they're paying taxes in other ways. Like you think about it, I'm paying property tax. I'm paying let's just say I go and I invest in the house, I buy a new HVAC system, I'm paying tax on that. So, people might say like, oh, they're getting out their federal. It's like, but you think about how much they use to generate in their business and stuff like that. When they pay their employees, they're paying taxes. When they pay anything, they're paying taxes. If I go to pay a contractor, I'm paying taxes. If I go to go buy for my Airbnb, we just bought some more toilet paper and some soap, and we bought some new comforters for the new place, paying taxes on that. So yes, you might not pay at the federal level for federal income tax, but at the end of the day, you're reinvesting back into that business. We just bought $5,000 worth of furniture. We're paying tax on that, whatever, 6 or 7%. Pennsylvania state tax, it's 6-7%. That's probably $350 that we just paid in taxes to be able to put that in our house. So yeah, and I live in Houston, so we're like 8.25 if you include city tax. So what's the topic about, and what the fuck is this bird? What are you talking about? What bird? Why SPY, not QQQQ? The reason why I don't like QQQQ is QQQQ doesn't have the profitability component to it. So while in good times, QQQQ could probably outperform SPY, the nice thing about SPY is that it guarantees profitability. So you're going to be in the 500 profitable companies versus the NASDAQ 100. It's just by market cap. What are the top 100 by market cap within the NASDAQ 100? It doesn't necessarily have to make money or not. And so there's that piece. Looking for dips in our phase. Palantir, Rocket Lab. In the meantime, still buying uranium stocks. Yeah, shout out to the people that are getting in on uranium. You guys have been on a what's the word I'm looking for? You guys are doing well with respect to how uranium has been performing over the past few days. Destroying your own house so you don't have to pay taxes. There you go. Taxes and houses to zero. Donald Trump got sued for writing off $50,000 he spent on hair products, and he won. I have not seen that, but there you go. Your commercial property tax was crazy high. Yeah, the nice thing about that is you get to write off property tax as well, because why would you have to double tax, right? Doesn't make sense. So that's the thing I plan on doing with real estate, my guys, is like, you buy a couple properties, and that's another piece, is like, it's a wealth generation tool. And you have to think at some point, I'm 33, at some point I'm going to want the cash flow piece. So you end up getting, and my goal is to get about a property per annum, so I bought one in 2022. I bought this house in 2023, which will eventually be a rental. I bought another house in 2024. I hope to buy one in 2025. We will see, ladies and gentlemen, if that comes to fruition. I got to come up with the cash. Whether it's a personal residence, I don't know. I could wait until 2026 maybe to buy another personal residence. This house is good enough, but if the right house comes along, I might buy another house here in Houston, move into that, rent this one out. But that's the hope, is get enough of mortgage interest and tax. If you think about it, like, a lot of people don't think about it this way. So it's like, even if you're breaking even on the rent, you're still making out, because you're getting appreciation through the house's normal appreciation. You're getting equity pay down. It's like, you don't necessarily need the cash flow. It just feels good because, at the end of the day, you don't have to come out of pocket to own the property. So I agree. I would always want to at least have some sort of like, and the nice thing is generally speaking, with like big HVAC things, like we're going through on our one property, which I didn't realize. So always be careful when you buy properties, look out for the HVAC. My sister told me, she's like, yeah, we're going to have to replace one of the HVAC units. And I heard one of the HVAC units, not all. And so it's an old house, so it doesn't have like really good central heating throughout. So there's some mini splits, etc. It's a big chunk of change. I think you guys have probably heard me talk about it elsewhere, whether it's on Map Money or whether it was on Cash Flow Chronicles. But yeah, it ended up being a big chunk of change, more than I was expecting. But generally speaking, they give you favorable terms to be able to get loans. But then again, those loans impact your ability to get credit going forward, right? I'm going to have this loan that shows up. People are going to ask me about it. I'm going to be owing X amount per year. You know, it makes it a little bit more difficult. But then again, we're spending whatever it is, $30,000, and then you can depreciate that, you know, because you just added a capital expenditure to the home. So we were able to, let's just say this year, if you just use the 80-20 rule on that house, it's a $544,000 house is what it was appraised at. Divide by, multiply by 80%. So it's $430,000. You're going to be able to depreciate over 27 and a half years. Add $30,000 to that. Now it's 465. So if it was at 435 divided by 27 and a half, we'd be able to write off $15,800 a year. Now we're going to be able to write off another $1,000 a year. So, I mean, it's not the reason why I would do it, but you're getting a $300 a year tax break on that. And if I wanted to, if I really wanted to, I could do a cost segregation study, which obviously would cost money to do that. But normally what you can do is say that depreciates faster than 30 years or 27 and a half years. Air conditioning way faster. So you could say this, I'm going to depreciate over 5 years instead of 27 and a half. Now, of course, you have to have like an engineer and stuff like that do that. But yes, 1031 exchanges is another piece of real estate that helps you with respect to continuing to grow the nest egg. So it's just interesting. I wish I'd used it earlier in my life because you can almost use it to offset a lot of the dividends and stuff that I've been able to get over the past few years. And so that's part of the reason why in the past I've always had to come out of pocket, is because I generate a lot of capital gains and dividends. And now with real estate helping offset that, it'll be nice to be able to yes, this is the 1031. When you buy, when you sell that house and buy another house with those proceeds of greater or equal value. So say I sell this house for $500,000. If I were to buy two properties that are $500,000 or one property that's $500,000 or more, I wouldn't pay any taxes. But no, engineer not doing the taxes, but the engineer would be able to determine what products in the house are depreciated, will be able to depreciate at a faster rate. So they'd be able to look at the HVAC systems, any sort of interior updates that I've done to the house. And so you'd be able to say, I've done X, Y, and Z interior updates, bathroom updates, etc. And they'd be able to say, okay, yes, this is ability to depreciate over X, Y, and Z. And then you'd have a tax professional say, this falls under this potential category. And for HVAC, it would probably fall under a 5 to 10 year category. So instead of being able to depreciate that $30,000 HVAC expense over 27 and a half years, which would be, slightly over $1,000 a year in write-offs, I could depreciate it over 10 years. And so it'd be slightly more than $3,000 a year in write-offs, which is more beneficial because I'm able to take that up front. And obviously having $3,000 of write-offs over the next 10 years is more valuable than having $1,000 of write-offs over the next 27 and a half. So anyway, just some thoughts there. I've never done a cost segregation study. I've just looked at them and I just don't think that they're worth it for what I'm doing. Now, if I did a big rehab or something like that and put like 50 or 60 grand into a house, then maybe. So your professor used to be an inspector or whatever. She found the trusses were all molded. Heard it here first. But anyway, now that I have 69 of you or so, please do me a quick favor. If any of you guys have Twitch, please go over to the Twitch account and please, as Sabrina Carpenter would say, please like and follow the stream over there. It'd be much appreciated. We're trying to grow that audience. We're trying to make sure that we potentially provide some other content for you guys on there as well. So whether that's just shooting the shit, not necessarily stock talk, but potentially some gaming, etc. Also maybe a little bit more political chats and more fun chats over there rather than just finance. We try to keep it real over here. Don't get me wrong, but at the same time, it's always nice to be able to do that. So we're trying to get to 50 followers over there. So if you guys could, please do so. What else is there potentially? That's rather it, my guys. I'm trying to think if there's anything else. Yeah, Mr. Patel saying, how would you like us to do more Twitch streams where we play some games, do more fun content, etc. That's the thought process there. But yeah, that's something that's up for debate. Potentially trying to grow that route as well. And the real potential behind that is to access more people, to really help people where they see fit. And the objective of why I'm always doing these streams is to really help people recognize and understand a little bit more about investing. I think right now you have so many people that are just like, just give me the ticker symbol, funny man. I don't necessarily care what your thoughts are. I don't necessarily care about, why you're doing something. Just give me the ticker symbol. But what you soon realize is a lot of what you end up doing is just following things you don't have any conviction in. You might follow somebody that is in it for 3 months. You might be following somebody that's in it for 10 years. And next thing you know, you forget about it. You might know when a decent time to buy is, but you don't necessarily know when you're getting out because you never followed up. You don't necessarily have your own conviction with it, what have you. My hope is we allow people and try to continue to help people understand when they're getting into a position, why is it relevant for them? Why are they potentially looking at it? Objective, time horizon, risk tolerance, how active or passive they want to be, and also how much capital they're contributing. All those things go into forming a truly unified portfolio. And it's not to say that you change, how that portfolio is structured, what your objective is, where some capital might be going. You could have multiple objectives for a larger portfolio. You could have a dividend side of your portfolio. You can have a long-term view and growth speculative part of your portfolio. It's just really dependent upon how you structure it. But I think the biggest problem that I see a lot of people is they play with it like it's a bar of soap. And when you're playing with the soap, you drop it, and you know what happens when you drop the soap. But the other piece is that you just kind of let it just disappear in your hands. You're not actually using it. And at the end of the day, you end up with less because of the inefficiencies of you just moving it from one place to the other. Now, if you're super calculated about it, it's a different story. And you can end up doing okay. But I think what ends up happening most of the time is people just run without a plan, and they make plans on the fly. And because of that, they lose a lot of inefficiencies. They see the stock goes down 10%. They're like, oh, I knew I should have sold it X, Y, and Z date, and I never did. And next thing you know, they break even though they were up 20, 30%. So just some food for thought on that one. And, I've seen so many times people are up. They're all excited that they're up. They're all excited that they're making money. They're like, I could do this. Screw investing in the market. I know exactly what I'm doing. I don't need anybody to tell me what I'm doing with my portfolio. And next thing you know, it's break even, and they're selling at a break even price, even though they could have sold for a profit. Hell no to the Twitch game video play by Chris. There you go. Nobody gives a shit about Chris. Can we talk about consolidating a portfolio instead of diversifying? I'm realizing consolidation create actual appreciation of the portfolio. It can, I think it all depends, right? So the thing that's nice about diversification is that it reduces risk overall. So you might not necessarily see as much volatility in the portfolio with a large diversification of things. Sometimes it's good to invest in certain sectors. Other times it's not, right? And if you're really interested in that, it goes back to talking about really trying to understand market cycles and individuals. And it's like, do you actually give a flying fuck? Like, do you just want to just meet the market returns? And I think what ends up happening is you hear all these people like they don't want to put in the work. Like somebody the other day, like I was just talking to a guy. He's like, oh, I got this $100,000. He was so excited. He's like, man, you got me in Rocket Lab. And he's like, I knew I should have put this extra $100,000 in it. And I was like, I can't answer that for you. Like I talked you through the first time you invested and you decided to only do $50,000. Why did you decide to only do $50,000? He's like, well, I didn't know if I was willing to lose 150 grand in the stock. It's like, well, there's your answer, right? I mean, I can't make that decision for you. You have to come up with that decision. He's like, well, in retrospect, and he's like, so what am I going to do now? And I'm like, well, I was like, I'll tell you what I'm doing. I was just like, but he's like, are you going to tell me? And I'm just like, that's a trade. Like, that's a monthly trade that I'm going to be doing until I decide to do otherwise. And I was just like, I'm not going to be here to spoon feed you, you know, like I'm not going to be answering your questions 3 times a month, you know, to try to help you. It's like, you have to teach yourself some of the times. And they're like, I was just like, you have to teach yourself. And they're like, well, how did you learn? I'm like, what do you think? I taught myself, right? Like I spent the time to look at something and realize how to do it. And I made mistakes, and now I can do something like that, which is sell puts, right? And I was telling the person, I was like, I'm planning on selling, you know, monthly puts at X price out of the money. And if it gets realized, you know, I'll let it execute. And I was just like, if it was my portfolio, that's what I would be doing with that money. But I was like, I don't know what your entire portfolio is, right? They told me the size of it. They didn't tell me what percentage of it was in X, Y, and Z. So it's hard for me to decide. Like, imagine me coming up to you and straight up asking, like, let's say you have a $50,000 portfolio, and I come up to you and I have a near $2 million portfolio, and I'll be like, what should I invest my money in? It's like, my portfolio is literally, I'm not smart with, what is that, 40 times the size of yours? So it's like, my portfolio is 40 times the size of yours. What would you say to me? It's the same exact thing if you doing the exact opposite. It's like, my portfolio is $2 million. Your portfolio is 50. Like, I have position sizes, like the majority of my position sizes are about $50,000. Some slightly less, some slightly more. So it's like, you know, it's hard for me to be like, how do I split up a $50,000 portfolio? I was there. I did it at that point. But it goes back to understanding what's right for you. And I think I see so many people early on, and this is one thing that I truly see. I see so many people early on investing in dividend stocks and limiting their growth because they're like, I found this 5% dividend yielding stock, man, it's the greatest. And I'm like, man, you screwing yourself, because you're getting that 5% yield, but then you're paying taxes on it and you're not actually growing at a decent rate. And to me, I've realized, like, I screwed myself out of hundreds of thousands of dollars by doing something like that. And you could just be investing in the SPY. You know, there's so many years that you're able to grow 20, 30% over the past 10 years that I missed because I was so focused on investing in ExxonMobil or, you know, and so it just goes to show you, to me, majority of the time, people should be investing in the SPY because they don't actually know what they're doing. Just like I didn't know what I was doing and I still don't know. Some people would look at me and be like, this guy still doesn't know what he's doing. And they're probably right, depending on way that they're looking at it or their perspective or what have you. And I understand that. So I try to say things and share with people, and they look at me like, and it's like, you have to realize I was probably there, you know, 10 years ago or 5 years ago, depending on where you are in your investment career. So it really just depends. Like, what you might say is diversification really could be saving you from you wiping out your portfolio. Because I see some people do what TJ does, and TJ, you know, if you make the wrong moves and you over lever yourself, you can wipe out your entire account. So I've seen people do it, and I hear people do it. And, you know, they think they can just write on margin and be perfectly okay. And at the end of the day, they end up almost wiping their account and starting from zero again. So, you know, they think that they know more. And this is the thing. They think that they know more than they do. And this is a case because I've lived through it. I've almost wiped my account, you know, back in, 2021. And if I didn't close out my position and take a massive loss, I could have had my account liquidated. Like, for example, I think, what was it? It was like GameStop. I don't know how many contracts it was, but I was underwater like 50 or 100 grand or something, and I just closed it out. And I'm happy I did, because I could have been there being like, let me see how big my balls are. And it could have gone from the 200 that I bought it back at to the 400. And it would have, you know, doubled the amount of money or tripled the amount of money that I owed. And they could have just been like, well, this current liability is larger than your entire account. We're liquidating you. And then there's no waiting around for GameStop to go back down below $150 or whatever I wrote the contract on. Because sometimes you can just be like, I'll just wait it out. I'll just wait it out. It'll come back down. It'll always come back down. But when the assets are no longer large enough to cover the liabilities, they just go ahead and margin call you and you're done. So if you don't even know what that meant, it just goes to show you, like, that's just the way of the game, right? And you need to potentially think about some stuff a little bit more. So it's super simple. And I think a lot of times people don't even ask the right questions. Which, like, when you ask like Alex Karp or you ask somebody a question and they give you the wrong answer, it's because you asked the wrong question. Sometimes it's because they're actually trying to sway into something that they actually know, or sometimes it's because, you know, they have something scripted in their head and they want to answer it a certain way. But I'd say most of the time, if you ask an expert about something and they give you the wrong answer, because it's an answer that you actually needed to hear. Like, for example, I could have just said, well, you just sell some stocks and you put it into the S&P 500. And I could have just answered your question that way, specifically this question. Where was it? Consider consolidating portfolio. I could have, that's as easy. I could have said, you sell some stocks, put in the S&P 500, moved on from the question. Instead, I've talked about 10 minutes about, you know, understanding where you are, understanding how you're going to potentially, you know, navigate throughout different cycles and God knows what. So, let's see. My guy, I went to sleep and wake up and you're still on. Am I dreaming? You are dreaming, my guy. You are dreaming. Time horizon is very important. Yeah, I mean, I had somebody call me up the other day. They're like, I got 50 grand coming in. What am I going to do with it? And I'm like, when do you need the 50 grand? Well, I'm thinking about buying a house next year. And I said, don't fucking do anything with it. They're like, but I think Bitcoin's going to go up. I'm like, okay, so let me ask you, Bitcoin, you think it might go up 20, 30%? I'm like, I agree with you. I think it will as well. But I was like, what were to happen if it were to decline 20 or 30%? Are you going to be upset by that? If that 50 grand is now 35 grand and you're looking to go buy another house or rental property? Like, I'd be devastated. I'm like, okay, so then don't fucking invest it. Those are the conversations you need to have with yourself. And I think a lot of times people are like, I'll just gamble and I'll deal with the consequences later. And it's like, no, you need to have those real consequence conversations with yourself right now. And I see so many people talk, it's like, I can't guarantee within 6 months you're going to be able to grow 20 or 30%. It's fucking stupid. So yeah, I mean, you could easily lose as much as you can gain. So it's not like we're at the bottom of a market where it's like you can shoot a fish in a barrel. Unfortunately, we're closer to a top of a market. Who knows? It might go on. It might double from here. But right now, we're at all-time highs. And to me, with what's going on, the uncertainty in the market, you know, a changing fiscal regime with respect to the rate cuts and everything and the like, who knows how the market's going to react to that. 30 and wake up. Anytime somebody asks whether this, my answer is, if you're asking me, you're not doing the work, put it in VTI. I like that. I like that. He's a wild man. I'm assuming you're not talking about me. What about Shell stock? I think that oil has more to go down. Chris, I would watch a gun channel. I'm not in a video game, so I'd watch just have some fun conversation. There you go. Cool. Well, the 70 of you, I do appreciate you. Stocks only do go up and to the right. You were 100% right. I do appreciate the 70 of you coming on and hanging out with me. I wasn't ready to go to sleep as of yet, but if you guys could, please go ahead and follow us over on Twitch. I would be much appreciative. And we're really just trying to get it monetized, my guys. We're really just trying to get it monetized to the point where we can have some more fun over there. And to be honest, we might do, I was having this conversation with Mr. Patel over text. It might be something where we do an initial cash flow chronicles and then I switch it over to after hours or something like that. Maybe it's something I do for, well, I guess I can't do it for members because if it's off YouTube, it's not really members, is it? So anyway, just some food for thought. I think over time, it'll be what we end up diversifying a little bit. Some things you honestly like, for example, Mr. Patel, I don't even know if you're still on here, but if you are, like the small things that we shared earlier, those videos that we shared, unfortunately got demonetized. It demonetized our most recent stream. So I have to wait for it to process the video so I can cut it out. Otherwise, unfortunately, it's going to be demonetized. So yeah, we'll have to. I have to see once it's processed, then I can go ahead and move it out. But until then, yeah, that minute-long clip from Malibu's Most Wanted. So we could trim out the video section for that, which I'm going to do, and trim that part of the video and hit save and trim it. And we'll see if the other parts come through for demonetization as well. So there is that. Appreciate my guy FG. Appreciate me grinding. I appreciate you, man. I really do. I really appreciate you. You're the reason why, because I was looking at my YouTube analytics. I always look mostly at the subscriber count growth and everything of the like, because I just want to make sure the message is getting out there to everybody. And because of you and Curtis, it'll probably, what was it, September will probably be the best month that I've had in years in terms of YouTube pay. Like when I was used to be grinding and put out videos like every other day and stuff like that. But because you and Hot Curtis, man, and all that money I was thinking about, because it was like a couple $100. I was like, what am I going to do? And I was like, I probably just going to put it in a rocket lab, to be honest with you. I mean, my thought process is like, it's still got so much more to run, you know? I should go to Austin for the Formula One race. I should text my cousin because he's really into F1 and he might end up in Austin. He was a couple years ago. Yeah, he was supposed to go. I don't know if he's supposed to go to Singapore or the Abu Dhabi Grand Prix, but eventually I'd like to go to Baku. There you go, my man. I appreciate the picks. So keep those coming and lets me live vicariously through you. And then eventually I'm going to have to ask your opinion on where else pores can stay. And especially if I only have like a couple days, because if I end up having to go to London or something again early next year, I want to take some time off, and whether that's Italy or Greece or what have you. But yeah, crap, it is probably closer to 7 a.m. if you're already. If I was you, man, I'd be sleeping in another hour or two. You're on vacation, my guy. But at the same time, you got to enjoy the vacation. You got to be there. And also, I guess it might get touristy if you wait towards midday too. So I guess if you're able to knock out some of the touristy stuff. So am I going to go to Vegas? I don't know. I have some comps that I got, which obviously means I gamble too much when I'm in Vegas. So I'm still 50-50 on it, to be honest. If I can convince some other people to go. The problem is it's like I need to actually, what I need to do is check out my vacation, how much I have left for November or December. So, and that's the thing. It seems like everybody's trying to stay in downtown Vegas, and I'm trying to stay on the Strip. So I get my comps are for the MGM casinos. So I can get, from what I saw, depending on what time it was, 2 days free in certain casinos, 0 days free in certain casinos, 3 days free, and then the really crappy casinos, it was like 4 days free. So you're going on November 15th, but I think a lot of the other folks are going the week before, the 7th through the 12th or something like that. Airport. That's right. Good man. Oh, you guys are staying at the MGM. There you go. Yeah, everyone was trying to convince me to stay downtown, and I'm just like, I get it to an extent, but you boy, I want to be where the people are. As they would say. What is that from? Oh, that's from the Cats. Meow. Anyway, appreciate the 61 of you. Please, one last time, hit us up on the TWITCH. Would love to see more and more of you guys over there. Hopefully, we'll be able to grow it to about 50 or so of us in the short term, and then we can start to hopefully try to monetize over there. But the thought process is I could do something like cut off the stream. So like I could cut off X, like I can do right now. I'm gonna cut off X, and remove it. So that was the end of X. So now technically we're only chit-chatting on YouTube and Twitch. And now what I can do is I can actually cut off onto Little Mermaid. I don't know why I thought it was cats. Little Mermaid. So yeah, now I can cut off on YouTube, and yeah, let me remove. I'm not going to delete on YouTube.